Good morning, you guys. Thank you for joining. My name is Saray. I'm the Community Relations Specialist here at Greater Nevada Credit Union. Just a quick bio for anybody that doesn't know me. I've been with Greater Nevada for almost 8 years now. I actually started as a member and then became a member service representative, and now I have the honor of being our community relations and looking over our volunteer program, nonprofit sponsorships, and my favorite, financial education. So again, thank you for joining today. We're talking about one of my favorite subjects, understanding and building credit. So we'll go ahead and dive right in. Nope, I hit slide, but let's see if it'll go. There we go. Before we get started, I would super appreciate if I could have a few moments of your time just to take out your phone and scan this QR code and fill out a quick survey. I will actually do it with you so I know about how long that it takes. But by filling out this survey, it helps me gather information for what more can we bring for financial education? What do you want to learn about? And that will help us determine, our future webinars and things like that. The information is very, very brief and not too personal. So I hope you'll find that it is pretty easy to fill out. I'm going to go ahead and test that now. It should bring up something called Smart Sheets, a form. And then that should have popped up about now. So I can give you a few moments to take a look and fill that out, but hopefully it's popped up on your phone and you can fill that out while I continue these next few slides. So welcome. Again, I just wanted to give a little bit about GNCU. We've been doing business since 1949. We have around 86,000 members and counting now. And unlike banks, our members are owners, they're shareholders, unlike stockholders at a bank. Members live or work in Nevada, so all of those 86,000 of our people are here, live or work in Nevada, which is amazing. So in this credit workshop, we're going to a few things here, 4 quick ones, and we're going to whiz through this presentation, but exploring the importance of credit scores and reports, right? They kind of rule everything in our life. It feels like learn to access information about our credit scores and report, right? Where do you even get your report and your score? Discuss strategies to build and improve your credit. That's probably why we're here, is we all want to know, how do I get my score up? We're going to give you some tips today. And then again, on the opposite side of that, we're going to talk about some mistakes that would possibly negatively impact your credit score so we can avoid those, right? We want to build our credit. So a credit score, what and why? We're going to take a look at it. I love this graphic. This is from our financial education resource. You can see down at the bottom, it's EverFi. And we'll send out these resources, but I just think this is a great story. It's a quick video that you can watch about, often credit building feels like we're climbing a mountain. We're climbing a set of stairs, I like to say, but each step that you do upwards matters and it counts, and it's going to get you to the top. So we're going to tell you some tips to get there. So let's talk a little bit more. A credit score, what and why? So maybe you guys already know this stuff, but what is a credit score? Well, briefly explained, I like to explain it as it's your trustworthiness or your credit worthiness in the credit union world, right? I like to explain it as a friendship, and I'll probably talk about it like that today. It's basically just a snapshot of our financial habits. Typically, the higher the score, the more options we have. Typically, the less we'll pay. Our credit score that we're going to be typically talking about, this is on the FICO scale. The lowest would be 300, where the highest is 850. So if you ever wonder what's a good credit score, there's a nice little graphic down there again by EverFi to show you what's good. What do we use a credit score for? So basically, think of any time you need to borrow money, any time from those lenders. Do you qualify? What's your maximum amount? What's your interest rate? What's your term? How long is that loan for? And you can see there a list of maybe some places that would use a credit score. You know, are you looking to, again, any of those are kind of borrowing, right? All right, we'll go ahead and move on. So I love this snapshot. It just gives us a look, right? We talked about good and bad credit. So we have two credit scores here, Joe and Lucy. They applied for the same 5-year loan, but I want to take a look at it. They both put $500 down. The amount of the loan is the same, $5,500. But because Joe has that lower credit score, he got a much higher interest rate compared to Lucy, which in turn, you can see the amount of the interest charge is not a difference in just dollars, but thousands of dollars. And so the total cost of the car is costing Joe, thousands of dollars more just by gaining our trustworthiness. So to dive in, let's understand a little bit about how that credit score is rated. We'll talk a little bit more about who rates those scores, but these are the easy 5 C's of credit. And we can start here. Capacity. How much debt can one carry before problems start? Character. What are the past behaviors and the payment history? How often do we move? What's our job history like? The capital, so any funds in our accounts or assets, right? Collateral, so possibly a physical item, equity or net worth. So examples would be maybe a home or a car that we own, something that, right, is a physical item, rather than just comparing that to a personal loan where there's no physical item. Conditions. So what are the terms of the loan? What's the amount? How much is it? How long is it going to be for? So the length of term. And what's the interest rate on it? This is, if you take anything from this, this is some of my favorite information of, this is actually how your credit score is built up. To the right of the screen, you can see EverFi provided a beautiful pie chart, but I like to break that down a little bit more. And over on the left side, I ranked it. So it has the heaviest weight is at the top. And I told you, credit is really trustworthiness, and your largest contributor to your credit score is payment history. Look at that weight at 38%. So the biggest tip I can give you is pay on time. Set automatic payments to put alerts so you don't miss a payment. One late payment can stay on your credit report for 7 years and typically can drop your score anywhere from 30 to 70 points. Always pay more than your regular payment. We're going to talk a little bit about that next. So the next weight is how much is owed. How much do you need to borrow? We talk about a friendship, right? If I have a positive payment history, I'm asking a friend to borrow money. If I pay late, am I a good friend? Amounts owed. If I ask to borrow every dollar my friend has, are they going to trust me? So the biggest tip I have is establish a regular savings so you don't need to borrow in the first place. Keep your usage, reasonable. So again, kind of like I explained, you don't want to ask to borrow all of your friend's savings account. So we typically say keep your debt utilization under 30%, so of your total amount. So again, if you've ever heard DTI or debt to income ratio, this amount owed is highly going to affect that. And then again, set up repayment plans for unpaid debts so you can keep that amount low in the beginning. Next up, length of history. How long have we been friends for? So don't close your accounts. You would think that that would be the opposite advice. Go close those accounts that we're not using. Actually, I'm going to tell you, those are your longest friendships. Keep those accounts and cherish those friendships because we've gained trust in those. So don't close those old accounts. Again, that could be ending your longest credit history, which can affect your credit. Don't fall into those tempting balance transfers. Sometimes they're too good to be true. You get those, for X amount of percent transfer over dollars onto the credit card. This could extend your length on the term. There's many things to think of before you do that. It could increase your amounts owed. And then another one, review your history once per year from those friendships, right? Or we're taking a look, how is our friendship doing? And just make sure everything's reporting correctly. Next one is new credit, right? So we want to, the way I explain it is I have many of you guys joining me today. If I asked to borrow borrow from one friend, and then I asked to borrow from another friend, and then another, and then another, and so on. By the sixth friend, they may be looking at, wait a minute, you already asked 5 other friends to borrow money. So new credit, this is keeping your limit of, limit those new inquiries. I typically like to say that 1 to 2 inquiries per year is average. So if you're going out shopping for a car, we have many tips to get a pre-approval loan so you don't have to apply so many times, but watch out for that. Limit yourself to, if you're looking for a loan or a credit card or something like that, maybe it's only 1 to 2 times per year that we're needing to ask to borrow money. Start secure. If you're going to start on new credit and you need some new credit, we're going to talk about some credit building loan options such as the secured loan and secure card. Start slow. Maybe the best way into a new friendship is become an authorized user. You don't have to do this, but this is great for people that are either building credit or establishing new credit. Maybe you have a friend in real life that you can ask to be an authorized user on. Maybe you're scared to really dive into a credit card. I know many of us are, nervous about that, and that's normal. Next step. 5% is the types of credit, and we're going to talk a little bit more about this as well, but proving our trustworthiness. Can we handle multiple different types of credit as well as different lines? We say that most people will have around 3 lines of credit, so maybe 2 credit cards and a car loan, to give you an example. Try to maintain all of your accounts, right? Be a good friend to all of those relationships and just monitor them regularly and adjust them regularly. When we look at them once per year, we're really looking at, how can I be better? What did I do great this year? All right, next up. That was a lot of information, but I do want to pause. We have a question break, and I did mean to pause in the beginning and tell you guys I'm happy to. We're going to have some question breaks during this. I'm happy to take you guys off of chat to take, off of mute to take some questions, but you can also utilize the chat feature. Michelle Hale is over in the chat helping me, and she's going to watch those. So I just wanted to explain a little bit more about that types of credit. I see a lot of people, an example I like to give of people that struggle with this. I had a friend who she was amazing at keeping her credit card relationships going, and she had a few. And so she got to the point of she was feeling ready to get a car loan. And then she got denied for the car loan. And she didn't understand why. She had great credit history on all of her credit cards. Why won't they trust her to get this car loan? So we're going to talk a little bit about that, because I think this happens to all of us, and many of us that are probably joining today, maybe you share a similar story. So types of credit. There's actually 2 different types of credit that I want to talk about today. That's installment credit versus revolving credit or loans. So installment credit, take a look. The example of this is a car loan. Installment credit are typically loans that are given in one large lump sum and then paid back down over time, down to where the balance is 0, paid off, and that loan is done, such as a car loan. or a home loan. And then we have revolving credit. So these are open lines of credit where you can continuously borrow from, such as a credit card. I need a little bit of money, I can pay it back down. Typically has a set limit, but as you pay back the loan, it's paying back that kind of piggy bank. So to go back to that example, my friend had great revolving credit history, but she lacked installment credit history. So she had great revolving, but still needing to work on that installment. And we're going to talk a little bit about that. So I wanted to pause. We just got a ton of information. I'm going to pull my chat up on this other side, but please, I welcome you guys off of mute. Are there any questions so far? Good morning, everyone. I'm finally catching up on chat. Okay, I don't think so. I'll go ahead and move on. Again, please, come off of mute or utilize those chat features. Oh, there we go. Okay, so first of all, we probably should know where we're starting or what our previous friendships have reported, right? So I want to talk about where can I get my credit score and report? And why should I even monitor my report? Sometimes I think, it's all safe and good and my credit score is great, but we're going to talk about why it's important to still look at that report. So first one is, where can you get your credit scores and reports? Well, from the 3 credit bureaus, and sometimes this could be at a cost, maybe it's not. I'm going to tell you a free option in a moment. But the 3 credit bureaus that actually hold and store our credit are Experian, Equifax, and TransUnion. And I wanted to pause there. Did you know you actually have 3 credit scores? Yes, so Experian, Equifax, and TransUnion all have particularly sometimes different credit scores. Maybe you share an experience of, wait a minute, I checked my credit score and it says it's this, but then I pull my credit or when I go to apply for a loan and it says this. Well, sometimes lenders will use one bureau over the other. Sometimes one bureau will use only store installment credit versus revolving credit. So to give you some background on that, and actually a little bit deeper, how we even make up our credit score, right? That word FICO in the very beginning. There's quite a few ways or algorithms. FICO is one of them, and there's all kinds of FICO 2.0 and versions of how they're weighted. But Experian, Equifax, and TransUnion are the 3 big ones that are going to store them that you can go to directly to get your report. Now, to get your report, you can actually go to right here on this link, annualcreditreport.com. None of those other ones, this one right here, we will send this out, but annualcreditreport.com, you can go there once a year and get your actual report from the bureaus to take a look out for free once a year again. So, and then sometimes when you borrow, ask for the report. Do they have the report or the score, and can they share that with you? Or sometimes can they share why you were denied? Always ask that information. Okay, again, why should I monitor my credit report? Fraud. Sometimes we don't know it's on there, and the only way that we can find out is going to that report. Maybe that's why we had a decrease in our score all along. Did you know that you can dispute things on your credit report? But you have to know what's on there. Mistakes, again, catch those. Mistakes happen, and it is okay to go and fix those on your credit report. Don't just sit there and think that that's all we can do. No, you can dispute on your credit report again, and you can go to your local financial institutions or credit unions, and we can help you through that process to dispute that. Or you can go directly to the bureaus, Experian, Equifax, and TransUnion, depending on maybe where you find the mistake. Again, knowing where we're at and how to improve, let's take a look at our past friendships and see how we can be a better friend. Okay, next up, what's even on our credit report? We talk a lot about what our credit score is, but we don't talk a lot about what is on our actual report. So a quick little graphic, again, this is from Everfi that you can reach, and we're going to show you how to reach it at home to get any of this information on your own time as well. But on your credit report in this top right, it's going to include personal information. So your name, your address, full or partial social security number, depending on where you get it from, and your last reported employment information. It's going to show accounts. This includes, basically any time you've asked to borrow money or credit. So anytime it was opened, credit limits, amounts owed, balances, payment history, etc. Anytime you asked to borrow, right? It's going to show all of those inquiries, all of those friendships you asked to borrow from, right? So that's the importance of that new credit. This is where, yes, if you ask that sixth friend to borrow money, when you already asked those 5 friends, is that sixth friend going to say yes? So it is going to show your inquiries, but I do want to talk, there is a difference about a soft inquiry and a hard inquiry on your credit. Soft inquiries are typically not when you're asking to borrow funds, but maybe you're just checking up on your score, right? Credit Karma is a soft inquiry. Maybe we're opening a bank account and they do a soft inquiry. These are not going to impact your credit score. A hard inquiry is where you're asking to borrow money. I have applied to borrow money, and those are going to be on, those are going to affect your credit score, right? If I'm asking so many people in a little amount of time to borrow money. So soft versus hard inquiries. And then some public records. So credit bureaus obtained from your local, state, or federal, courts and information such as bankruptcies, judgments, and liens. If you have any of those, hopefully we don't. So I also want to talk about what's not going to be on my credit report, because I think that's just as important. So information not found on your credit report is going to be medical history or records. Okay, we don't see your buying habits. I don't see your purchase history. I don't know what it's like. Right, we don't have that on there. I don't have your checking and savings information. We won't have, we as in a credit report, won't have checking and savings information. So I've heard it a lot when, but I hold a large amount in the bank. Why did I still get denied for this credit card? Actually on your credit report, we don't know how much is in your checking and savings or how much assets you have, such as your purchase history, right? Those are going to be on maybe your bank statement, but not your credit report. And again, I don't know your income and your asset information. I like to also say, because I put a home on there, maybe you do have a home loan and that is going to be on there, but some other, not your full look at your income. Definitely, we have maybe your employer right on that credit report, but not a full look at your asset income. Okay, pausing. Any questions? I don't see anyone. The main question I think I get is, what about Credit Karma? And so I want to pause there. I think it's a great question to pause of going, Credit Karma is just, I think, a snapshot of your credit history. I think it's a good look, but I wouldn't take Credit Karma or maybe some of those other ones that aren't those direct 3 bureaus we talked about as literal. They maybe not hold all the information. Maybe they're not up to date. So I would just expect, that your history or your score may not be the same as Credit Karma, but it may be an okay way to look at soft inquiries in history. Greater Nevada isn't associated with it, but I personally use it. But I just know when I go and check it that it isn't my full credit report and history. So it is important still, even if you do check, your score and report or what's on there on things such as Credit Karma, go in and take a look at those actual reports from that annualreport.com.
So, Saray, I have a question in the chat. It says, for your credit score, does it matter how much you use a credit card or just how long you've had it open?
Absolutely, right? I want to go back to that main pie chart. Sorry, let me go all the way back. Oop, too far. This one. So yes, absolutely. How much you use your credit card is going to affect your score. That's your amount owed. If you have $1,000 credit card, that does not necessarily mean you should use that full 1,000, right? Am I being a good friend asking to borrow their full savings account? So that's going back to, we want to keep it under 30% utilization. So to give you an example of that $1,000 credit card, I don't want more than $300 to revolve over to the next month. It's okay to use that 1,000 for emergencies. That's why it's there. But we don't want to let that full 1,000 revolve over to report on our score to say that, uh-oh, we borrowed our full friend savings account. And then, yes, how often you use it. That's a great question. Thank you for bringing that up. How often you use it definitely does matter. I give an example of, well, I never use my credit card. Why isn't my credit going up? I've locked it up, right? I want to say, well, are we being a good friend? If you've locked up that credit card, we haven't talked in a while. Are you still doing okay? So it is important to use your credit card just so I know that, yes, you're still maintaining, you're still having healthy habits. We're still good friends. So how often you use your credit card is important. Now, on the opposite, that is how little to use it. On how high you use it really depends on, are you paying it back positively? Do you have a positive payment history? How much owed, right? Maybe you can use a credit card frequently as long as you're paying it down frequently and being a good friend. I hope that answered that question. Michelle, any additional, or I hope that answered, please let me know if you want me to add to that.
I think we're good right now.
Okay. Awesome. Great question, though. Those are two ones that, thank you. Yeah, I didn't cover, but I always get that example of, well, I never use my credit card. Not using it isn't going to increase your credit score because we stopped talking. Okay. Whew. We got through the grit. We now understand what's on our credit report. We understand what makes up our score, where to get our score, where to get our report. Let's get into the good stuff of why we're all here. Tips to improve your credit. But I think it's important for the understanding because this is going to make a lot more sense to you thinking of that pie chart of what weighs our credit. Number one tip, stop applying, right? That new credit, it is a smaller percentage, but stop applying means I don't need to borrow money from our friends. So again, build up that savings account is next, because if we establish a regular savings, we probably don't need to borrow as much. Okay, remember, payment history was the number one weight of your credit. Set up automatic payments to pay on time. Do not miss a payment. Okay, review your reports at least once a year and correct errors if any. Do a credit dispute. Don't let those mistakes just sit there. We can fix them. Set up repayment plans for unpaid debts. I know things like judgments, liens, collections, all of those look heavy and sometimes we just want to avoid them, but I'm going to encourage you, tackle it straight on. This is when you have control and you can set up repayment plans. Again, each step up those stairs or up that mountain is going to help your credit score. Okay, pay down balances and keep under 35%. That utilization, again, be a good friend. We don't want to borrow the full savings account. Okay, maintain all our credit accounts and don't close old accounts. Keep our old friendships. Keep talking to them. Keep maintaining those. Okay, another one, maybe we are good at credit, but another way to boost is taking out some secured products. So we're going to talk about in a few secured loans and credit cards are great options to build a credit. And again, we talked about become an authorized user. Maybe we just need to start slow. This is a great option for those becoming 18. My little brother is 18 and he is worrying about credit, right? We get to that age where we need to move out, but we need credit to get approved for an apartment or something like that. So can I add him as an authorized user? He's not ready to use the card, he says, but then we could, excuse me, that's my alarm, right? We could gain some history for him as I pay. But again, as you add that authorized user, just know that trust needs to be there between that approver and on that signer. Okay, pausing. I know, maybe we haven't heard of secured products to build credit, so we're going to talk about those. And Greater Nevada does offer these. And if you're not with Greater Nevada, I would go to your local institution to see if they do offer these. Many of them do. So the first one, and this is how I personally started my credit, and not everywhere offers these. But again, look for shared secured loans. Here at Greater Nevada, we do. So typically, to explain a share secured loan, it's freezing funds in your savings account. Okay, I'll explain it. Let me go through this circle, and then I'll give it to you in my own words. But basically, pledged funds, right? You have these funds already in there. We're going to lock them up and they're released to you as you make payments on time. I'll give you an example of this, okay? There is minimum collateral required. So like I said, we are locking funds up in the savings account. So typically it's around $500, $1,000. Hopefully there's even going to be some smaller ones in the future to help build credit so that $500 isn't locked up and affects us too much. So the maximum loan amount is the 100% of the funds. So however much you put down is the amount of the loan typically. And then the maximum loan term is to 120 months. So let me explain this in real terms, and hopefully that'll give you an idea. I like to say, let's pretend I am the financial institution and you're looking to come build your credit with me. Let's begin a friendship. So yes, the minimum collateral is required. Sometimes there is funds required to build your credit. So let's say you start, the goal is save up $500 to start building your credit. We lock up that $500 in your savings account. You come to me and you say, hi, I would like to build my credit. And I say, okay, you know what? That sounds great. You have $500 in your savings account. I'm going to lock this in a little safe for you. But you're going to prove to me that you can make payments on time. I'm going to still make this $500 available because what we're going to do is typically set it on automatic payments, just so it routes, right? And as I make a payment, that lock unlocks on the savings account. So as I make a $50 payment, that balance goes down. So as you come to me, you show $50 and you make your payment, I will take $50, well, let's call it $49 because there's going to be interest in there. I give you some funds back. So as you show me that you've can pay $50 and you've kept that $500 safe in your savings account, I will release that lock. Okay, so just knowing when you are creating a secured loan, the goal and the recommendation I would say is to not touch that $500 in your savings account so you can set it on automatic payments. But I understand that we are real people. Maybe we need to use that $500 in that account. I don't recommend it, but just know you've made the pledge. You pledge to make that $50 payment or however much your secured loan is. I say $50 because I used this product myself. It's typically a set interest rate. Ours, I believe, you guys can correct me in chat. I think there's a few Greater Nevadans on here. But it's around 4.09, 4%, for between 4 and 5%. And it's a set amount. So my interest on this loan was very, very little. I think I had done it on $1,000. I think my interest was around $14 and my payments were around $50. And I did this loan for about a year, just proving that I was a good friend and that I could make payments on time. And I saw a difference in my personally, I can't say this is yours, but maybe with positive payment history, you can share the same story of in 3 months, it got my attention. In 6 months, I was noticing my score increase. In a year, I was able to get a regular credit card, which was a big step. Okay, so that is going to help us build, remember, that installment credit. Remember where we get that lump sum in the beginning and we pay it down to a zero balance. Next step, let's maybe work on that revolving credit. You can actually get a secured credit card before you go in and apply for a real credit card. Maybe you don't have history. I don't recommend going and applying without history in case you get a denial. You can start with the secured credit card. A great way, like I said, establish a regular savings so we can do some of these products. So how a secured card works is you can enjoy the convenience of having a regular credit card. It works like a regular credit card, and you can carry a balance on it. But it does have minimum collateral required. So such as maybe you have to put $300 down on it, and $300 would be the credit limit of that card, right? If you put $500 down, $500 credit limit on that card for the usable credit. And then after a year, basically the same thing. What we would do is, let's say you put down $300 in a card. We lock it in a safe and keep it safe, but give you a credit card in return with the same balance. And then as you would use it, go slide it, make a payment, go slide it, make a payment. And this collateral, that $300 is just collateral, a cushion in case something happens. What if we don't know, or we haven't gained our trust and our friendship yet? What if you run away? So we have that $300 in case that happens. But as you make positive payment history, possibly a year of positive payment history, guess what? I'm not only going to give you that $300 back, but you're typically going to be upgraded into a typical credit card or have the score to be able to apply to a credit card that you would like as well. So some tips there. I hope that helps.
Saray, I have one question on.
Yeah, absolutely.
Can you keep applying for this loan?
Oh, that's a great question. Yes, you can. It is not limited. You can actually, not that I, would recommend it, but you can have multiple shared secured loans at the same time. I'd recommend it if you can handle that and have the funds and collateral to put down. But the more positive payment history you show, the higher the score. So this is great for people that maybe you have a good score, but you want a great score, but without the insecurity of adding another credit card or line of credit. Add that shared secured loan. Once that's paid down, maybe you're ready for another. I used this product building my credit, but again, I think I'm right in that where I would love to see that next step. I'm considering a second shared secured loan in my lifetime. So absolutely, there's no limit to how much you can apply for that. As for the secured card, again, I would just recommend that it's of what you can manage, as well as the payments, and you have the collateral to do so. Did that answer that question? Hopefully.
Got it.
Okay, awesome. Any other questions? I think maybe I saw for your credit score, does it matter how much you use? Okay, perfect. I got that one. Perfect. Thank you guys for utilizing the chat and answering questions. So, okay, actions that can lower credit score. We talked about how to improve it, but let's talk about some behaviors to avoid, right? We talked about missed or late payments. That is the largest factor of making up our credit. It can drop our credit score, like I said, from 30 to 70 points, around that range, and it stays on our credit report for 7 years. So especially, I talk to our youth and I get the honor of facilitating financial education to a lot of our high schoolers, and a lot of the high schoolers I'm talking to are 18 years old, and one late payment at 18, that seems like such a long time, and it is a long time. So set automatic payments, don't risk it, okay? But I also wanted to talk about, some factors that make up a late payment. They're looked at differently. How often are you late? Have you only been late one time, or are you late every time, right? So the frequency of your late payments can affect your credit score. How recent was your latest payment? If you have a very recent one, typically you're going to have, a decrease in your credit score. More recent is more risk. If you did it a long time ago, you had one late payment, years ago, and you've showed positive payment history since then, that is going to be, shown in your credit score. You've changed behaviors and your credit score should show that as well. The severity, how late was the payment? Was it just the next day or was it 90 days late? There's a difference in the severity of a late payment. One late payment, again, can take 2 years to make up one late payment. That's really tough. But again, we all make mistakes, but I think it's important to look at, yes, we will see those positive behaviors and actions of you taking those steps to increase your credit score. We're going to see those in the frequency, the recent, and the severity of, if you had a late payment. So don't feel bad if you have had one or if you do have one. It is okay. We will trust that you will make it up. Okay, high utilization. We've talked about that. Do not max out your credit cards. Do not ask to borrow that full savings account. The number one thing is, I would say, work to get your utilization down below 35%. 30% is great. Have all of those revolving under 30%. And if you're interested in tips to do that, I would sign up. We have a debt management webinar coming up, and you'll get some tips on, how do you maintain that utilization in that future one. Next, history. I told you, don't close those old accounts. If you go to another financial institution, you would think that they're going to tell you to close accounts, but we are telling you the opposite. Do not close those old accounts. Those are your longest friendships, and they can probably say great things about you. Okay, your frequency. Again, how often are we asking to borrow money? How often are we applying? See if we can get that savings account to where we don't have to borrow money. Okay, limits on your cards. Using your types of credit, right? Using only revolving loans. Remember that story of my friend where she had credit cards and went to get a car loan and she was denied because she was only using one type of limited credit, that revolving credit, and not that installment credit. So if you have a limited history, that can lower your credit score. Okay, any questions on these before I go into some of our next steps? We're gearing up on the end here, just right about on time, 8:45. I don't see any, so we'll go ahead and move on. So we've gained a lot of information today. Take a deep breath. We've made it through. We're going to tell you some next steps, right? Action plans. I want to give you the information, but I also want to give you information after we leave this webinar today. So, work on building our financial habits. We're not perfect. Nobody's perfect. We can always look to be better, right? Maybe we already have a good credit score, but we want a great credit score. So always just having your financial goals top of mind is important. You're taking action just by thinking of them and creating them. Get help. We're here to help you. If you do not know where to start, guess what? We have this Balanced Financial Fitness program. It's a phone call. It's a private counseling service for free, and you do not even need to be a member with us. I recommend call that number, go through how can we get tips just to be better, maybe anywhere from budgeting to building credit to debt management. Balance can help you, all certified financial counselors. Do your homework. Make sure if you are looking into getting your credit report, getting your credit score, or applying for new credit, that it's legitimate organizations that you're getting from. I want you to avoid getting fees when you're searching for these things as best as you can, and to make it as easy as possible. Questions again? Okay, I don't see anything. If we should have some time at the end if we need to. For those of you that jumped on a little bit late, and hopefully you guys still have that up, but as a reminder, please, please, please just help us give some feedback. Maybe you want to change your answer. Some of the answers are going, how confident are you feeling about this? Maybe you weren't feeling as confident in the beginning and you're feeling much more confident now, is my hopes. But again, go ahead, take out your phone, scan that QR code, and I highly appreciate if you can fill out that quick survey for me. This doesn't add you to any of our marketing lists or anything like this. This is purely for financial education and helps me understand what more do I need to bring to you? What do we want to learn about in this community? And that'll help Greater Nevada put out some more, webinars and things like that. That's exactly how we get our feedback, is from you guys. So thank you again. So I'll leave that up for a couple more moments. Okay, next up, I told you we got a lot of information today, but we're not leaving you hanging. We're always going to be here for you. So another QR code, you can scan all of our financial tools and tips. So a lot of this information in this webinar today is right from our website, which you can scan that QR code to. And then I want to talk about some other, tools and steps. Taking those steps of those stairs are the only ones that can do that are us. And you have to take financial education into your own hands, but we're going to give you the tools to do it. So again, there's that balanced financial coaching up there. It's offered in other languages. If you want to take this home and use it, highly recommend. Learn something new. You saw a lot of these graphics I mentioned came from Everfi. Everfi offers quick modules that only take about 5 to 10 minutes that walk through all different types of financial subjects. From budgeting, credit building, debt management, to even how to help a grandparent bank. So recommend there. You can even do it right from your phone. And then for any of us that have beautiful students at home, we have the same exact thing. Everfi has this great colorful platform that goes through 3 topics for our students, essential topics in my opinion. They get to explore smart budgeting, smart savings, and smart investing for our students. So again, right on that QR code. But anybody that signed up for this webinar will be sending out this information to you with quick links. So don't feel stressed or feel like you need to write this information down and scribble. Again, we are here for you. We are going to be through this with you and for you. So again, I wanted to thank you guys for helping me help you live greater. And again, just pat yourself on the back, even being here, again, setting those financial goals at top of mind. You've already taken the first step, so congratulations. But again, my name is Saray Helms. I'm the Community Relations Specialist here. I'll be sending out an email to all of you in a bit with a lot of the tools and resources that we talked about today, but you'll as well have my contact information, and you can always reach out, ask questions. We're always here to help. With that, I wanted to see if there are any questions. We have a bit of time. We finished a bit early. Our brains are probably frazzled with information. We talked about a lot: building credit, credit scores, where to get them, weighted credit. Okay, no questions. How about, can I get, if you're feeling a little bit better, give me a thumbs up. If you learned something, give me a thumbs up. Hopefully. Awesome. Thank you. I'm glad. I do see okay, I was going to say I thought I saw a raised hand, but I hope you got some information out of this. I don't want credit to be intimidating or scary. Just knowing how credit is made up, I hope has given you the confidence of what we need to do to build our credit. Again, if you want some information on how to take down that utilization, go to that website, and we have a webinar on debt management. We can talk a little bit more in depth about, okay, if we want to take some next steps on getting our debt or utilization down. We're happy to take those next steps with you on our next webinar. But again, thank you guys, everybody. I guess I'll leave it to a early send-off, 10 minutes early, which is incredible, talking about credit. Again, I hope you guys are feeling a little bit better. Thank you for joining me bright and early in the morning. I will let you get back to your day. And thank you again. Have a beautiful day, everybody.